Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Thursday, the 27th of March. Michael Brown will be along shortly. Here he is. Let's get him on the call. Invite to co-host. Um, as usual, we'll be providing a jump start to your trading day with an explosive daily market preview. But before we do, I'll get the legals out of the way. Nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ or indeed the hosts, which, as you know by now, is myself, Mr. Ryan Paisley, and of course, Mr. Michael Brown, who, given yesterday's speech by Rachel Reeves, is probably bright red, smoke coming out of his ears, and just fuming, basically.
Yeah, about right. Very good morning, Ryan. Good morning,
Yes.
everyone. I would say happy Thursday, but to be honest, it's not another miserable day in this failing country that we live in.
Oh, and on that note, the sun is shining.
Are you still there?
Oh,
Oh, yes, you
yes.
are.
Yeah,
Oh,
yeah.
sorry.
I'm
I
just,
thought there was
I
going to be more than just the sun
no,
is out, but clearly
no,
not.
no. I've lost for words. I got head in hands, just shaking my head, just giggling to myself about how angry you are. It's a very good sight. Anyone that hasn't seen Michael Brown fuming, it's a magical thing.
I almost feel like we need to do a special video episode just for this.
From the pub.
Yeah, definitely. The Cross Keys over the road is actually open at this time of the morning. To be fair, so.
Oh, is it? There you go.
Yeah, they open at 8.
Perfect.
Not that I know from personal
Oh yeah,
experience,
yeah. No, of course not.
Oh, right. Shall we crack on?
Yeah, go for it.
Let's do it. Good morning, everybody. There's really kind of two main issues of the day to get through this morning. The first being the spring statement from Chancellor Rachel Reeves yesterday, and the second being another tariff announcement out of the White House late yesterday evening. Let's kick things off with the spring statement, though. I guess just to preface this, first of all, it's worth saying that markets actually digested the statement significantly more easily than I would have expected. And I suppose that was largely because everything that Rachel Reeves announced was broadly in line with expectations and broadly in line with the sources reporting that we'd seen prior to the statement actually being delivered. Having said that, the lack of surprise was certainly not a signal that all is fine and dandy with the economy, because in many ways the spring statement just simply laid bare the rather dire macroeconomic state that we are in. As if to epitomise that, the latest OBR forecasts, which of course will be wrong, saw the GDP growth expectation for this year cut in half to 1% from a prior 2%. Yes, there was a little bit of a hangover from that, which saw projections for the remainder of the forecast horizon revised marginally higher. But to be completely honest with you, the sight of Labour MPs and the Chancellor cheering a growth forecast of 1.8% in 2026 is just utterly lamentable. If that's what we're going to be celebrating. To put that into a little bit of context, last week in the United States, the Fed downgraded their growth view to that pretty much that exact number, and all of the sell side and the journos in the US were saying, oh my god, this is stagnation, whereas here we're going, fuck it, let's pop the champagne corks, which I think gives you an idea of how far behind our peers we are falling. Yes, that's very true. That is very true. Only some people. In any case, the OBR also said that the government's fiscal headroom has been restored to £9.9 billion, and that without the measures Rachel Reeves announced yesterday, the government would have actually been £4.1 billion in the hole. Now, I think that 9.9 billion figure is interesting because, to be more precise, it's actually 9.93 billion pounds, and those who are keen fiscal students of the UK economy will, I'm sure, recall that the headroom left after the budget in October was also precisely 9.93 billion pounds. Exactly. So this is very much a government that is sort of policy making by spreadsheet, I suppose, is the way to phrase it. And I think the reason for that, the Treasury knew if they were even slightly short of the headroom they had at the October budget, the market was going to punish that very, very severely indeed. Now, I want to just make two further points on headroom. The first is that 9.9 billion quid is still just a third of the pre-COVID average. So we've rebuilt the buffer to where it was 6 months ago, but we certainly haven't rebuilt that cushion to anywhere near the degree that the economy was operating with in, sort of quote unquote normal times in the past. And as a result of that, of course, we've seen over the last 6 months how what was 9.9 billion became minus 4.1 billion. Doesn't take a genius to work out that that could happen once again if there is an economic shock, or if the economy evolves more pessimistically than the OBR have forecast. On that note, that of course is a ridiculously narrow buffer. But on that note, the OBR, when you dig into their report, which is what I was doing at 5 o'clock last night while all my colleagues buggered off to the jam pot in the sun, the OBR actually stated in their forecast that a 0.6 percentage point increase in bank rate and gilt yield expectations would entirely wipe out that 10 billion quid worth of fiscal headroom. Now, it's
Yeah.
important to recall that two things here. One is that is half the margin of error that the Chancellor left herself in terms of market rate expectations at the October budget. And the second is that gilt yields are already 20 basis points higher than when the OBR's forecast window closed. So we're actually talking about a 40 basis point move rather than a 60 basis point move. In short, to cut out, some of the sort of fiscal jargon and all of the numbers, it feels absolutely inevitable that the Chancellor is going to be stood in the Commons in September or October saying the OBR forecast, without me doing more, I will break my fiscal rules. So here are a fuckload of tax hikes. Because there were no taxation changes yesterday. All of the focus was on spending cuts to government departments, and also in terms of the welfare bill, with a supposed billion quid saving from tackling tax evasion thrown into the mix as well. In terms of one other point on this, the gilt remit was a touch lower than market expectations at 299 billion. The estimates that I saw was somewhere near a 310 billion. So I think that helped the market to digest what Reeves was saying, and also the DMO continuing to focus on issuing shorter dated debt as opposed to longer dated sales. In fact, the share of long dated sales fell to 13.5%. That was expected to be at about 18-19%. So again, that just helped the market to sort of digest the figures. But I guess on the whole, we are really exactly where we were a couple of days ago when we were sort of previewing the spring statement, in that we are effectively stuck in this doom loop of very, very narrow buffers with which the fiscal rules are being met, spending cuts now. Tax hikes seem an inevitability in the autumn, given the tiny margins for error that the Chancellor is operating with. As we said earlier in the week, the solution is to change the fiscal rules because, frankly, they're not fit for purpose. The problem is the Chancellor does not have the credibility among market participants that you need in order to ditch those rules. If Rachel Reeves stands up and says, I'm tearing them up, then there is going to be a severely adverse market reaction. So I think the question that I have now as we move through the next 6 months, which are going to be, frankly, littered with reporting as to which taxes the Chancellor may wish to increase. The only question I've really got at this stage is, what is going to be the thing that hammers the last nail in her political coffin? Is it going to be finally losing the last shred of market confidence that she's clinging on to? Or is it going
Well,
to be that she needs to break the manifesto by delivering tax hikes in the autumn?
the line that got me was that she claimed that she has fixed the foundations of the economy. Um, I'm not quite sure how she can say that with a straight face, or she's just that stupid that she believes what she's saying.
Yeah, I don't know. To be
A
honest,
little bit of
I
option A, a
genuinely
little bit
do
of
not
option
know.
B.
The if anyone has access to the Times, there's a good article in there actually on that note from their parliamentary sketch writer.
840.
Oh dear. And Tom Peck, who wrote this piece, was basically saying the only evidence of fixing the foundations he can see is that she's provided free breakfast clubs to school kids. And in what way is that vital to the broader economy? I have no idea.
No, I'm with you there. You okay? Just checking
I
in.
am.
Just welfare
I'm
check.
still alive. I'm
Yeah.
still alive.
Okay, perfect.
Moving on from that, before I have a coronary over here, we need to get to the issue of tariffs out of the United States, because yesterday, sort of mid-afternoon, we had reporting via Bloomberg that President Trump was preparing an announcement on auto tariffs, and that announcement, it did indeed come, albeit after the market closed in the United States yesterday, with Trump slapping a 25% tariffs on all automobiles that are not made in the United States. That was a little bit more than
Yes.
I think participants have been expecting. I think 20% was the number that I had seen thrown around. Sticking on the tariff front, Trump, clearly a late night in the White House. I don't know whether he was up having a bit of a bender or something like that. But he was tweeting this morning at about
Oh yeah.
2 a.m. Washington time, saying that if the EU and Canada effectively gang up and work against the US to impose retaliatory tariffs, guess what? Trump's going to go and throw even greater tariffs on those two nations. And of course, among all of this, Trump reiterating that the 2nd of April will be quote unquote Liberation Day when we get this full slate of reciprocal tariffs. On the back of that, because of course market participants were expecting the tariff news after those Bloomberg reports, we did see equities trade lower on the day, with the S&P losing 1.1%, snapping a 3-day winning streak, and the Nasdaq losing about 2% on the day. Of course, we were trading softer anyway, and then the market just extending those declines on the back of the auto tariff headlines. We also saw some modest softness in the Treasury complex, particularly led by the long end of the curve, while the dollar traded broadly firmer on the day, with the dollar index up by about a third of 1%, and the mighty euro slipping and sliding down into the 107s as my free
Yes.
lunch gets further and further away.
Yes.
Couple of other things just worth mentioning. In terms of yesterday, we did have the latest durable goods orders figures out of the States, orders rising by 0.9% in February, well above the 1% decline that participants have been expecting. The 5-year note auction out of the States was a little bit soft, tailing when issued by 0.5 basis points, but market participants seem to shrug that off relatively easily. And a couple of last things from me. The first, the debt ceiling, joy of joys, we're back on that one. The Congressional Budget Office have put the so-called X date at the end of August, although they did caveat that by saying that if borrowing between now and mid-June is significantly greater than their projections, then the X date could arrive sooner. Mid-June is important because that is when a whole bunch of tax payments are made in the United States, which will obviously
Right.
give the Treasury a little bit more time to sort of tide themselves over. But the debt limit
Yeah.
is going to be raised anyway, and the US are not going to default. We know that for definite.
Definitely not.
And last but by no means least, Janet Yellen. Anyone remember her? She
Oh yeah, Auntie Janet.
she
Yeah,
has
go on.
gone and joined PIMCO, so I'm sure she
Of
is
course she has.
being rewarded handsomely for that, and got a nice pad on the west coast where she's going to be chilling out, doing
The
absolutely
revolving
sod all.
door.
And that's all
Love
from
it.
me
Love
for
it.
now. I'm going to go and calm down while you.
Well, put your teeth in. Whilst you run across the cross keys and get yourself a couple of tequilas, I will read out some of the overnight news headlines via our dear friend Zach, who is still on holiday, funny enough, but he's putting in the work. So who am I to judge? So, firstly, macro news. Obviously, as Michael alluded to, the 25% tariffs going on imported cars and light trucks. I did see one headline suggesting that he was thinking about doing a bonus tariff on top of the light trucks, but we'll see how that comes into fruition. Obviously, this is coming in on April the 3rd, so plenty of time for more headlines. So I'm sure we're already seeing this morning the auto manufacturers from the APAC and Europe scrambling to kind of see what they can do to tickle Trump's balls, I guess you could say, to try and get him to reverse some of these. Trump has warned the EU and Canada could face far larger tariffs if they jointly harm US economic interests. This kind of ties up with there's been a lot of dialogue between Canada and the EU, kind of seeing how they can leverage their combined weight. China trade moves. Trump says he's open to reducing tariffs on China to secure a TikTok sale, but AFP says Beijing rebuffed the idea. China's industrial profits fell 0.3% Jan to Feb, citing US tariff headwinds. Vice Premier Ding touts more policy support. Banks accelerate
Oh,
writing off
sorry. Hang on one
bad
sec.
proxy loans. Yeah, gone.
No, I was just going to say that name rings a bell.
Oh, and pardon my French, but go fuck yourselves. God. Oh, someone's perked up after a couple of tequilas. Mainland IPO approvals in China are resuming, signaling a potential listings rebound. Pardon me. Global tariff fallout. A court keeps in place an order blocking Trump's freeze on trillions in government aid. Economists warn public data quality may suffer due to federal workforce research cuts. And research cuts. Canada to respond with possible retaliatory auto tariffs after Trump's new vehicle duties. Yep, we covered that. Japan's PM Shiba says all options on the table to counter US auto tariffs. South Korean automakers slumped this morning, largest in a month. Taiwan, Brazil, and others prepare policy responses. I think we're going to see a lot of policy response headlines in the next 72, well, probably the next couple of weeks, to be fair. Central banks and FX. ECB's watch suggests holding rates steady amid trade uncertainties. ECB's Kazakh signals scope for further rate cuts in the current trajectory if the current trajectory persists. Barclays are warning that currency markets underprice US tariffs. The yuan and Mexican peso remain vulnerable, according to Barks. Regional highlights: France's 2024 budget deficit narrowed slightly than expected, to 5.8% of GDP, offering some respite. Brazil's President Lula says Trump will fire a WTO complaint over Brazilian steel imports. European oil traders weigh re-entering Russia's market if sanctions lift, expecting Moscow to keep a tight grip on exports. I think soon as we get any rumours of sanctions being lifting, it is going to be it's going to be the absolute wild west when the big firms try and get back in and claw as much market share as they can from the Russians. But one to keep an eye on. Geopolitical, speaking of Russia, the Treasury Secretary Bezant hints that Russian banks might rejoin SWIFT pending European backing. Taiwan holds a realistic civil defense drill, emphasizing deterrence versus China. And in corporate markets news, TSMC and Musk on tariffs. TSMC's $100 billion advanced US chip plant may do little to restore American semiconductor leadership. That's according to the ex Intel CEO. He has just moved on to his new chip manufacturing company. So, he's probably just talking his own book there. But as I always say, no one else is going to talk your book, so you might as well do it for you. Elon Musk says that Tesla isn't fully spared by auto tariffs. Cost impacts not trivial, while Trump suggested net neutrality for Tesla. Small business media now. Paychex CEO sees no imminent US recession, citing stable small business confidence. Good on him. At least he's got his name in the paper. Major advertisers return to Fox
Well,
News with Trump's re-election push.
sorry, I was
Yep.
going to just jump in and say I made a similar point about that Paychex bloke, and it touched a nerve with our resident Swiss correspondent.
In what way?
Apparently, this bloke knows absolutely everything about the economy, and he's super got his finger on the
All
pulse.
right. Oh yeah, I'll take your word for that. I've never heard of them.
No, nor have
But
I.
but this actually raises a good point. I think people, especially Standard Chartered, are great for doing this, right? So there's one reason and one reason only. Um, oh God, Zach's texting me.
No,
There's
no.
one reason and one reason only, in my opinion, that Standard Chartered are known for putting out these insane Bitcoin targets.
They just want their name in the media.
It's because they want their name in the media and they want to be, they want you know crypto people to like Standard Chartered and put all their money there. Zach has just messaged me. Paychex has its finger on the pulse of labour market. You can't ignore and put all faith in fallible survey data, in my opinion. Everyone's still waiting for hard data to collapse. Thanks for that, Zach. Oh, that's what he replied to you, apparently. Anyway, China Tech and
Yeah,
AI.
I just ignored that.
Yeah, Alibaba unveiled a new multimodal AI model, the Quen 2.5 Omni 7B. I know
Good.
Michael was itching to play around with that, handling text, images, audio, and video. Foxconn to detail its EV roadmap in Japan on April the 9th, seeking ties with more Japanese car makers. SK Hynix cites pull forward chip orders ahead of fresh US semiconductor tariffs. And finally, in consumer and retail, two bits here. H&M posted weaker Q1 sales than expected, while Next raised its profit guidance, citing resilience in the UK market. And Elliott Management explored selling Bayer's consumer health unit with PE firms. And that is it from me. Back to you in the cross keys.
Good stuff. Thank you, Ryan. Sadly, I'm not there. I'm still in the office, unfortunately, but can't rule out a little journey over there at some point during the day. Anyway, moving on in terms of scheduled events today, outside of trips to the pub, we kick things off at 9 o'clock this morning with a policy decision out of Norway. The Norges Bank expected to hold rates steady at 4.5%, although the market pricing about a 1 in 3 chance of a 25 basis point cut. So it could be a little bit of a vol event for the Norwegian kroner. In terms of the remainder of the day, we do have some figures out of the States. At 12:30, we have a final read on fourth quarter GDP. That is expected unrevised at 2.3% on an annualized quarter-on-quarter basis, although, of course, the data is a little bit stale, and to say the economy has moved on a lot in the last 3 months is probably a bit of an understatement. Also at 12:30 today, we have the weekly US jobless claims data. Note, of course, that the continuing claims print, that does pertain to the March non-farm payrolls survey week. The figure expected at 1.885 million, down from a prior 1.892. And of course, the March jobs report is due next Friday lunchtime. Also, out of the States today, we have the latest pending home sales data, although that drops at 2 o'clock this afternoon. In terms of other bits and bobs to keep an eye on, quite a busy slate of central bank speakers. The BOE's Dingra was meant to be speaking 20 minutes ago, but I haven't seen any remarks from her just yet. We're also due today to hear from the ECB's Schnabel, Escriva, Wunsch, Vilroy, and de Guindos, as well as the Fed's Collins and Barkin. We continue with US supply today with a 7-year note auction at 5 o'clock this afternoon, $44 billion being sold there. And last but by no means least, overnight tonight at 11:30 this evening, London time, we have Ryan's favourite economic data release, which is the
Yes.
Tokyo CPI figures out of Japan. That is seen at 2.7% on an annual basis in March, down from the prior 2.9%. And of course, in addition to all of that, market participants continuing to indulge in our favourite hobby of headline watching, not only in terms of geopolitics, of course, but also on the issue of trade with us. We inch, or move rapidly, I suppose, towards the 2nd of April, Liberation Day, and of course also as we look for retaliation from the auto tariff announcement yesterday. And that is pretty much a lot from me.
Thank you very much, Mr. Michael Brown. I re-put my teeth back in. Thank you very much, Mr. Michael Brown. But before we go, a big shout out to a dear friend, Mr. Clive Lambert from Future Techs, who
Oh,
today is
yes.
celebrating 25 years in the business, and he's one of the best. And I'm not just saying that because he's put his car behind the bar tonight, but it helps. I'm not going to lie. So, Clive, I will see you later. Wear my tux. Please make sure the top shelf liquor is available. But listeners, thank you so much for tuning in. And
Does
we
that
will.
mean I have to babysit you later on?
Oh, are
That's
you also
twice
going?
it. Yeah, that's
Have
that's.
you been invited? Have you? Oh,
I have,
sorry. I
mate.
thought it was a
I
private.
get invited to all the best things. Don't you
Oh
worry about
fuck!
that.
Oh fuck! Abort! Sorry, sorry. Clive assured me that it was just like the cream of the crop.
How the fuck do you think
Actually,
you got an
thinking about
invite
it,
then?
yeah, thinking about it, why the fuck did he invite me? Okay, well, I'll see you later for a beer. Right. Anyway, listeners, enough about our social life. We will see you tomorrow. Probably a little bit hungover, but have fun. If you are trading today, be mindful of headline risk. Obviously, use PIQ Suite to stay on top of the headline risk. And we will see you tomorrow. Speak to you later.
Bye bye.
Bye bye.